Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Scott Melker, crypto trader and investor, also the host of the Wolf of All Streets podcast and author of the Wolf Den newsletter. Scott, it's great to see you as always. Welcome back to Trade Talks.
Thank you so much for having me on for another month.
All right, you got it. And Scott, speaking of another month, a lot has happened between August and September.
It sure has. Obviously, speaking specifically about Bitcoin and the crypto market, we saw sort of a huge rally after the drop down to around $30,000 for Bitcoin, and then a pretty surprising and quick correction just a few days ago on Tuesday. So now we're watching and waiting to see what could possibly come next.
Well, it is a great space to trade, that's for sure. And do you think it was attributed to what is happening with El Salvador? Is that the entire reason? I mean, what's a concern there, supply?
I'm not sure what the concern is. It just seems like it ended up being one of those buy the rumor, sell the news sort of events. There was a lot of hype and excitement about it. And as you know, in the Bitcoin market, it can be easily moved by large players. But I think they took advantage of that excitement and quite a bit of open interest. And once again, we saw a leverage cascade triggered by a very few spot sell orders. So, you know, they take advantage of that opportunity to sell a bit. You get a cascade of leverage. It drops down a few $1,000s. They probably buy right back and we reset.
Yeah, well, I mean, it seems like there's a lot of lessons to be learned with the amount of leverage that you can use in the crypto markets, as we saw certainly earlier in the year. Let's talk about NFTs for a moment. You're seeing a lot of celebrities get into the space. I think I heard the other day, Kim Kardashian's in the NFT market now, which, I mean, makes you wonder, are we top ticking a bit here? Is there still more room to run? Does this lend more legitimacy to it?
Hard to know if we're top ticking or whether there's more room to run, but I think it's very clear that it's a bubble and that bubble will pop. But again, it's a fool's errand trying to determine when that will happen. And there could be a heck of a lot more upside before it does. And also that's just speaking specifically about sort of this cartoon art side of it and not the actual use cases of NFTs as a whole, which I believe are very much in their infancy and we'll see becoming a part of the future of many, many parts of the world that and our technology that you would not even necessarily expect.
Right. And, you know, I think when people think of NFTs, they think of it from the perspective of collectibles and how can you value something that's on a screen? Well, Scott, you can make the argument, why do baseball cards hold value? It's just a piece of paper. Why does fiat hold any value? You know, the paper's no different between a Canadian dollar and a US dollar.
Sure, and I would argue that NFT holds quite a bit more value, obviously, than fiat or paper money. But you nailed it on the head. Basically, it's about the scarcity and about the provability of that scarcity, which you lack with physical objects. And really, NFTs are about so much more than just art and collectibles. Think about it as a way to transfer value from one person to another without an intermediary, without a toll collector, without a third party. That's the future of NFTs. Any document, your car title, your mortgage that can be transferred directly to the buyer without having a third party tell you that you need permission. That's the future of NFTs.
Yeah, well, they need to transfer some of that technology over to when you get a mortgage, especially when it comes to title. I don't know why that's not on the blockchain in today's day and age. Outside of valuation, there's also been a number of regulatory things that have been happening in this space as well.
Yeah, it's a bit disconcerting, to be honest. I think there was a lot of optimism about Gary Gensler coming to head the SEC, but it seems that he is favoring heavy-handed regulation and wants to deem almost everything a security. Most recently, obviously, the Coinbase news. Coinbase tried to launch a lend product. They went very transparently to the SEC, told them what they were going to do. It's a very conservative product for this space, 4% earnings on USDC. And effectively, the SEC said, no, you can't do it. If you try, we'll sue you. We view it as security, but we're not going to tell you why or put it on paper. Very, very confusing for anyone trying to build in the crypto space in the United States. Listen, it's fine to regulate. It's even fine if that regulation is a bit heavy-handed. What's not fine is offering no clarity to companies and then retroactively punishing them for behavior that wasn't wrong when they did it.
Yeah, but Scott, don't exchanges already lend out cryptocurrency? I mean, isn't that how people are earning yield? This is happening.
Absolutely. It's happening. It's happening all over the place. And like I said, this is very conservative. The rates generally across the board are, you know, approaching 9, 10, 11, 12% on USDC lending, and even 6 or 7% on Bitcoin and Ethereum lending, which is obviously riskier than just a stable coin, which we know is backed by dollars in a federally regulated US bank like USDC. So yes, I think it's very confusing. It's obviously an awkward position for Coinbase to be in. And I believe that they will have to fight back hard to really draw a line in the sand here and say that this is where it ends.
Right. Well, I also think it's bigger than just Coinbase. It's the industry, to your point earlier. To wrap up here, what are you looking for as we go into the next month here? I mean, we know for stocks, September tends to be a little bit more volatile. From a historical perspective, is it the same way for Bitcoin and the larger altcoins? And what are you going to be looking for the next month?
It is. September has historically been a bit of a down month. And I think we've talked about this before, exacerbated by COVID and the fact that people just wanted to get out of their houses this summer. And I think they're enjoying the last vestiges of that at the moment. But I'm pretty confident that we're going to see quite a rally coming into the end of the year, that 2021 will finish strong. I believe we could very easily see six-figure Bitcoin in that time, although that was dampened a bit by Tuesday's move, obviously, if the market puts in a bit of a lower high and ranges for a while. But I think altcoins are going to continue to go absolutely nuts. They're even going crazy right now as Bitcoin is correcting, which is not something that you see that often.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.